In my email, I talk about the first immediate support level. As long as the price is above this level, 51.30, we should see further grind up or push up. This whole chunk right here is already overbought. In the past few weeks, since February, is leaning against this overall of the channel as well. Last Tuesday, a reversal up break below this access line and then commit below this breakout bar. There's a little bit of the demand tail and also hit the immediate swing low support. But did we have any follow through to the downside? No. That's expected because first we have a demand tail right there. Means there could be an attempt to go up, which is reflected next day. On Wednesday, this is the attempt to rally up, but not really a bullish sign. In fact, this is quite bearish as well. If you look at this two bar, the first bar shows increasing of the supply, although there's a little bit of the demand tail that only suggests there will be a attempt to rally, which is the next bar. Next bar, there's an attempt to rally with even higher volume right here. What's the results? The results is close at one half of the previous bearish bar. Not a good sign at all. In fact, there's a rejection tail right here, suggests there's quite a lot of the supply at this zone. At that point, it is fair to assume a continuation to the downside if we have a break below. If we have this kind of the candle break below, then we could expect a down move. But next bar just reverse everything. Next bar on Thursday, I have an attempt to dip down and then get bought up. There's a buy on dip at this level and then just hits all-time high again. On Friday, that's when the SMH, the semiconductor stocks like NVDA, AMD, quite a lot of the stocks have a huge reversal bar like this with a spike of the volume. The volume just spiked to the highest in 1 year's. High volume acted as a reversal bar for a lot of the semiconductor stocks, especially the NVDA. That's why it actually put in a relatively bearish bar on Friday. But yesterday, there is just another demand tail similar to this bar. The bar on Thursday just have an attempt to go down and then got bought up at this level. Same level again, about 51.60. That's the level. Get bought up again yesterday. As long as it's still staying above 51.30, S&P 500 will keep grinding up. We could still do something like this, keep grinding up until we see further increase of the supply and then eventually have a commitment to break down 51.30. It could challenge the next target, which is the green box. The green box is meaningful support zone, close to 5,000. There are two levels below. First is about 51.30, second is about 5,000. The first level that you need to break in order to have a downswing is 51.30. There are quite a lot of signs. There's increasing of supply last Tuesday. This bar here, and this is also another bar. There are quite a lot of the selling on the way up. Since here, this bar, and then there's this bar, selling bar, and then this is going up, and we have another bar going up. This is quite a lot of the selling, and this is also selling again. It's just a matter of time that we'll see some bearish commitment at the right level. In terms of the price action, in terms of the level, is still bullish. There's nothing to worry about, but there's quite a lot of the increase of the supply in the past few weeks. We need to wait until it commits to the key level. Yesterday just showed another demand tail right at this level, 51.60. Now we have a minor level, 51.60. As long as there is staying above, then it will just keep push up a bit higher. 51.60 followed by 51.30. The first scenario that I talk about in the email is about the shakeout. Well, what exactly is a shakeout? Here is a straightforward uptrend. From a long-term point of view, this is a higher high, higher low throughout. Let's just concentrate on the recent price movement, which is this channel. This is a very obvious uptrend, up channel. If we have a breakdown A breakdown of one level, breakdown of this level, that could really just trigger a quick shakeout, a sell-off to somewhere around 5,000 or below, and then to bounce back up from there. That's a shakeout type of the scenario, and to just keep going up higher. There is still further rally for all these growth stocks. The second type is a rotation, means it's still going to break down and then trigger a sell off into a more meaningful support zone. It could be this green zone or further down. If we get down below, then there's still 4,900 here. This is another support level, 5,000, 4,900, and it could still bouncing up and then starting to consolidate. It means that all those mega growth stocks will just take a pause, take a rest, while there is a rotation into the Russell 2000. A lot of the bottoming type of stocks just recently breaking out, consolidation, going up, or some stronger, means their bottoming process is already done last year. They are a lot higher, just keep going up and then breaking out. The rotation scenario is a lot better because it lets the mega growth stocks just take a rest while there are a lot of other so-called undervalued stocks because they just breaking out from the bottoming process. Just like Russell 2000, it forms a huge trading range for I think close to 2 years, and recently just have a sign of trend rally, building up the right handle, about to break out. A lot of the chart similar to the IWM, the Russell 2000. That is the rotation scenario. The other growth stocks, if we have the rotation, might not bounce back up strongly. You could just take a pause, consolidation, because most of them are very extended. Some are parabolic like NVDA, SMCI. They consolidate while there's a lot of other small mid-cap stocks just break out from the base, from the accumulation structure. That is the second scenario, the rotation type. This is a super strong momentum, impulsive upwave, brief consolidation, another impulsive upwave, brief consolidation, another impulsive upwave. This is a more meaningful consolidation. After that, it's just keep grinding up higher. If we have a shakeout, then it could just hit this green zone and then bounce back up, or this zone, let's just take this 49 to 5,000 into this zone and then quickly sharp reversal, bounce back up. That could really see higher targets and to just go up higher. That's likely as well because this momentum is just too strong that it will take a topping formation in order for it to reverse. It could still keep going up higher until we see further increase of the supply level. What about the crashing, the super bearish type? So far, I don't see any clues coming out apart from there is a few spike of the supply in a few bars. A more meaningful correction or a pullback is likely and definitely will happen. It's just a matter of time, but it won't really go into a bear market just like it's 2021 and then just have a huge sell off. Even if we have this kind of the pullback, that will cause a lot of the stocks to normalize itself. This is still a healthy pullback or a correction rather than a sell-off back in 2021. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.